right, well, welcome to a Thursday stream. Really appreciate everybody's time today. Hope you've had a good week. The weeks are flying by, and the end of August is very, very near. Perfect time to start reviewing your journals, start reviewing, you know, repeatable mistakes, how you can fix them. Um, I honestly can't tell you if you set a goal and you kind of slack on that goal, how fast time will bite you in the ass. It's crazy because I had set a couple goals for myself, and I'm like, I thought I had more time, and like I'm looking at the time, and it's like the end of August already. So it's just a point that if you make some goals for yourself, keep working at it. And it doesn't have to just be trading, of course, right? Like for me, I've been wanting to get back to the gym, and I'm having a hard time trying to figure that out. And I thought I had more time to do it, and it's like, of course I have time, but it's like we're already entering September, very very soon. So, anyways, Lincoln says, did post my day in my personal threads. Yeah, let's quickly check that out for a sec. So I'm not sure if you guys are aware, but you can create your own little personal thread here, and I highly recommend it. Right here, discussion. I mean, start your personal thread, and it's not you're not doing it for people to follow you. You're doing it for yourself. You're doing it to help you grow as a trader. A couple years ago, I started my own personal thread in what was the premium Discord for Unicorn University at the time, and like I said in many other live streams, like I just did it for myself, and you have to document your journey to help you stay accountable to yourself, but also at the same time, other people might engage in. If you have questions, you can tag people. It's just a great place to help you accelerate your growth, right? So great job in doing that, man. Look at this, just saying he's right here, so check him out, check out what he's got. It doesn't hurt to review other people's stuff too if you're in that position where you're still learning, or you're still trying to grow, haven't maybe figured out things, or maybe you're comparing notes, right? There's nothing wrong with that. I just think if you do it strategically, then you're not going to create FOMO for yourself or panic, especially if you're like doing it like while the trading session's happening. I think in those circumstances, you want to really like lock it down a bit more and be a little bit more selective on the information that you're surrounding yourself with, because I've been through that before in the past, and it can influence you and make you change your mind or second guess yourself, and then next thing you know, you're taking a stop loss when you shouldn't have been in the trade, or you're taking no trade and you should have taken the trade and it goes to TP, right? So it's like things like that. So anyways, let's talk about today. Let's talk about what happened. Let me go back up to my trading thing here. Okay, so let's go to the start. Oh my goodness. So, first things first, you got to check the, Forex Factory or Financial Juice just to see what news was there. There wasn't really anything important today. So, second thing is you got to start marking off levels. Now, I just want to talk about something very, very special. I haven't introduced this really as much into my streams. Kind of kept it in the back a bit, but I'm feeling a little bit more confident in sharing more about it. And you'll start noticing it more on my screen. You'll notice that I'm starting to use a little bit of other elements in terms of confluences. Now, it's not like a make or break for me. It's just used as like an additional confluence. So similar to how I use SMT to just kind of like sweeten the pot a little bit. I've added a couple other things to my chart that I've been studying like independently, and I just kind of felt like it's time to kind of amalgamate everything together. So nothing's changed from the ground up, right? The core, which is referencing the daily EQ to figure out the daily buys for the day. Are we trading in premium? Are we trading in discount? For those that don't know, if we are above the DEQ, that's this level right here. The daily EQ is a dynamic level that calculates the high and the low. Sorry, it calculates the equilibrium per the high and the low on the daily candle. So if new highs are made or new lows are made, the dynamic EQ, the daily EQ, will also shift, right? Depending on the direction of what's happening, because it's an average. So nothing changes there. Higher time frame levels are still the same. H1 levels, H4 levels. You can see I got them marked off here, right? The other thing is overnight session highs and lows, right? London and Asia, highs and lows. Nothing changes there. And then, of course, we got previous daily high and previous daily low. So the key levels are still the key levels, okay? Nothing different there. But here are the two different additions or two different types of concepts I kind of started to add to the mix. Now, I was studying envelope filters with another trader that I've known for a very long time. Some of you might actually know him. He goes by, originally he went by Bourbon. Now he's changed his name, I think, to BNS. But his charts, if you go to his, you know what, I'll go to his personal thread for a sec so you can see what I'm talking about. You'll see what he's doing. If I can find it. I know he took some time off to take a break. Oh, here he is. So here's Bourbon. Here's his personal thread, but if you look at his charts, so let me see if I can find a better chart. Usually he has higher time frame charts that we can use. Sorry, bear with me. We've had a lot of conversation in here. Okay. No, not that. Doesn't have any bigger charts to use that I could share. Okay, maybe this one. So you'll notice, if I just kind of zoom in, you'll see these lines, right, that he uses. So a long time ago, he was sharing these charts, and I was like, my goodness, what are those lines? Like, price is reacting perfectly off of some of the extremities to the range you have. And then I started learning more about it, and they're called envelope filters. And from then, I just started kind of, I added it to my charts, created a separate profile for it, and I would just kind of monitor how price moved in relationship to those bands and positioning. And I started studying more about how to situate myself better with those, because as an IFEG reversal trader, I'm always looking for an edge to help me define where reversal could take place, right? So if I'm looking at, if I go back to my thread for a sec, or my channel, and if I just go back to this, so if I'm, marking London low or, previous daily low, we know those are key levels. The problem is we don't actually know if price is going to reverse potentially from there. And that's where having the envelope filter comes into place. So I know, Tracy, you said you mentioned VWAP band, but it's not a VWAP at all, okay? I actually don't use VWAP. I'm using this envelope filter. And the envelope filter, I have it set so that it's marking the 200 moving average as the basis. And then what happens is the calculation of the envelope filter itself, like the bands, what I've used is kind of like a higher distance range. And I'll show you guys in a sec. But what it does is it allows me to kind of see where the exhaustion for price movement could be moving, where it could react from. So that's what these bands are, right? So you can see right here with London had a reaction. Oh, sorry, not London. The end of Asia, actually, excuse me. London session had a reaction. Yes, it had a reaction off of the Asia high, but look at where the Asia high is located, right where the upper band is on the envelope filter, and look at the reaction that you have. So it's not to say that you use it as a standalone, but I'm using it as an additional confluence to give me better idea, once again, as to which level price has a better or a more probable chance of reacting off of. And once again, I'm a reversal trader, so I'm gonna look for these types of edges. Okay, so that's one thing that I've added. I'm probably going to go through more of a tutorial on this down the road. Right now, I just want to kind of quickly explain it. Okay, Tracy said, I've seen someone use VWAP bands and started deviations in the same way. Yeah, I mean, the way these levels are kind of calculated are different though. Okay. So a VWAP band is basing it off of volume, right? The envelope filter is actually using it more as a mean reversion type of method. So I'm not trying to overcomplicate this. And I'm not trying to confuse your own processes, okay? So don't take this and get confused. I hope that's not the case. But here's the thing. When you define the basis of the envelope filter, so this is the 200 moving average, that's my basis, that's the mean. The envelope filter then creates that standard deviation distance per the mean. So that's why it's like a mean reversion. So the idea is that anytime the extremes of the range or the bands get met or get tagged, you will see price move back to the mean, right? Move back to the basis. So the setting I have, once again, is the 200 MA, and I have the setting for the envelope filter at 0.5. So, I mean, this is a great example right here where price tags the upper band and then moves back to the mean, right? So that's the whole concept behind the envelope filter in a very, easy breezy kind of nutshell. But the way I like to use it isn't so much in that way, like a mean reversion method. That's how Bourbon kind of uses it and has been very successful with it. I think he's even automated some strategies, which is crazy. Really smart guy. But like I said, I think he took a slight little break, but I'm sure he'll be back. But really, really solid dude. So shout out to Bourbon. What's the name of the indicator? Yeah, I'm going to show you guys in just a sec. So that's the envelope filter. And then we can kind of go back and I'll show you some examples too. The other thing I'm using is pivots. Okay, so I'm using what's known as pivot points. So pivot points, I'm just using the traditional pivot points. You'll notice I have these thicker horizontal lines here. So this is the kind of like the central pivot. Then you have like R1, R2, and R3. So what I like to do is measure the golden pocket using Fibonacci between these ranges. So you'll notice on my charts that I have these purple lines here, right? So these are the golden pockets, 0.5 and 618 Fibonacci. What I've done is I've just measured the range between the pivot and the pivot above it or the pivot below it. So between R1 and R2, you have a golden pocket here. Between the central pivot and R1, you have another golden pocket. So what I'm trying to do now is align my key levels. So like London low, for example, I'm trying to align it with the lower envelope filter band. And there's also the pivot golden pocket right here that I've calculated. So like if price were to have swept into this area, I've now added 3 key levels or 3 key concepts of criteria, confluences to support that long idea. So now it's not just like, oh, London sweep IFVG entry. It would now be like London sweep, pivot point golden pocket, envelope filter lower band, and then maybe there's an FVG with SMT. You see how you just keep stacking these things? Then you can start to see in your journal the probabilities, right? Because now you can have a full definition of like, the quality of the trade setup, right? Like, does it capture all of the criteria? If it does, you have an S tier setup. If it only captures, 4 out of the 5, you probably have like an A plus setup type thing. You get where I'm going with this. Now, I'm not trying to grade my setups and overcomplicate my process. All I'm trying to do is just put as many confluences and stack them together to give me an idea that, hey, this is super high probability versus, I only got a couple of things here. It's not as high probability as it normally would be. So maybe instead of risking, a lot of money, maybe I'll risk a little bit less, right? Things like that could be part of the decision-making process in the future. And there's no guarantee, right? Even something that's S tier can fail. We all know this. But once again, when I go back to my journal and I look at these levels, price typically responds very, very well. So today, this is what it looked like at the start. I was looking to see, are we going to get higher time frame buy-side liquidity level sweeps up here that align with the envelope filter band, with the golden pocket, the pivot golden pocket. There's a lot of key levels here. Or are we going to get something down here or maybe even something lower? The funny part is we got nothing for me to work with. I had nothing to work with there. Price just kind of hovered around the R1, R2 golden pocket, which is very conveniently located right where the daily EQ is. So, and the 200 MA. Okay, so you see how I'm kind of stacking these levels. Price loves to gravitate towards these things. I'm telling you, I'm only sharing it now because I feel confident enough to do it. But it's just so obvious to me. I don't see anyone using these types of methods, so I'm not going to really try to expose this. Like, I feel like it's a pretty good edge. So if you're here listening to this, I mean, there's some sauce for you right there, in my opinion. And I also do use pivot points when it comes to stock trading and higher time frame swing trades that I use with crypto as well. And it works very, very well. I'll show you guys what I mean. So anyways, this is what we had set up, and we'll talk about the first thing, which is what happens right out the gate. Okay, Don Pablo's in the house. What's up, brother? This is what we got first thing in the morning. Okay, so we got price moving off the daily EQ right at open, right from that golden pocket, the pivot golden pocket, and we can see it swept in H1 sell side liquidity. Problem is, we're chopping around the daily EQ. And when price already kind of moved this aggressively, it already started sweeping the LRLR. And when that happens, you can't just like jump into the trade. Just because it confirms an IFVG, it doesn't mean you enter the trade like a robot. You have to use context. Is the drawn liquidity taken? Yes. Like, can price still move up higher? Of course it can. But do you want to put yourself in a low probability chance, or do you want to put yourself in a high probability chance? And the thing is, to me, this is a very low probability situation because it already took the liquidity. And unless like you got in early and you exited up here, like if you're like front running the candle close, which I couldn't do because there was just not enough time left on the clock and I wasn't comfortable because it was the first minute to open, you have to stand down. Okay, and it's a good thing I did because the next candlestick was this, right? Literally would have just hit stop loss immediately. So not worth it. Decided to wait. And then, we start seeing ES hit London low. Okay, so the thing with ES hitting London low is we know it's a key level. We know when price hits these types of levels, you can expect a reaction. The thing for me is I wanted to just wait. I don't trade ES. I trade NQ. So if NQ is not tagging one of those key levels, then I'm not going to be interested. Now you'll notice there's something missing on this chart, and it's actually the pivot itself. And I'm going to show you something. I'm not sure if I had it in another chart here. Let me see. I sworn it hit that pivot. Okay, let me just clear out my chart here for a sec, just so it's clean. And let me just put my correct setting up here. Okay, perfect. So, and if I hit rewind right there, okay, so this is what we're talking about now. So what you'll notice is when ES tags, I'll just go to ES for a quick second. When ES tags London low right here, okay, at 931 and starts to have like a pretty good reaction, look at what's happening to NQ. NQ is tapping a pivot point, okay? It's tapping the R1 pivot. So the thing with this, and I'm still not sure what I'm doing with this yet, if I'm going to use pivot points themselves to also trade off of. So that would then mean I'm not just using, H1, H4 liquidity. I'm not using just overnight highs and lows. I'm not just using previous daily low, previous daily high. A pivot point might be a new option for me. And the reason I like it is because of the reaction. But here's the problem. I thought about it long and hard if I would take a trade off this level because, London low is being swept on ES and having a very, very good reaction. But I got to stick to rules as well, right? Just because levels get tagged, you still have to follow the rules. And the rules for me are if price starts to have FVGs that are not sized appropriately, 5 points and higher, I can't take that trade. If FVGs are going to be stacked on top of each other, making a trade non-singular, I can't take that trade, right? And if I look at what's happening here, which is the most important part, was we do have this FVG right here. It is pretty small, but it is sized appropriately, 6.25 points. So I was watching this. The problem, which is the final problem, is that look at how close we are to the daily EQ. I had an issue with that. So if I had my stop loss something like, say, 30 points, you know, let's say you have a setup like this. And this is a little bit of strategy we'll talk about. But if I just hit next here, okay, so you get something like this, right? Let's say my stop loss is like right here. 1R is up here. My issue was that I don't know, like it's too close to the daily EQ for me. And I didn't know if it was worth the risk, okay? So you see these candlesticks? So this would have been like 1R. Does it hit it? It looks like it just misses hitting 1R, which then means if I was not able to take TP quick enough here, because you know how fast price moves, immediately my stop loss gets hit break even, okay? So I decided to just not take that trade, but I just wanted to show you that the pivot point there is fire, right? Look at that reaction off the pivot point, and then once again we know ES was sweeping London low. Okay, so let's keep moving forward. The other thing about that trade also is look at the reaction off of the 200 MA, right? This is why I love the envelope filter, because it not only gives me like an extreme of a range, it also shows me the 200 MA, which we all know is a very valuable MA. It's a classic MA. It has nothing to do with ICT. I think, you know, I stress this a lot to you guys. Don't just like ignore core, you know, fundamental concepts of trading, which are, you know, tried and true, right? Like these things are so old and they've always worked. Nothing's perfect, but they've always worked to show some sort of confluence to help you understand price action a lot better. It's a timeless thing to use, the 200 MA. I mean, just look at the 200 MA here, right? Since 6 in the morning, the way price is kind of reacting to it, right? Multiple rejections here, pre-market, and then, of course, a very strong reaction off of the 200. So knowing that price has had multiple rejections off the 200 MA, and the 200 MA is starting to, like, kind of curl bearish, this DEQ becomes even more intriguing to me. So I started noticing, hey, we got a rejection here, and we have a potential play for a short. Okay, we have this potential on the horizon, and what that means is that we're targeting, you know, from a very clean perspective, we're targeting London low here. You have the lower band here. If I flex the golden pocket, there's the golden pocket right there too, right? So all of this is where the drawn liquidity is for price to move to, if this confirms. Okay, so I'm watching this, rejection, rejection, rejection. I think it goes even higher. And here's the 200 MA again. Here's the upper pivot, okay? But then, for some weird reason, we get this massive spike at 946. Now, I don't know what caused that spike. I'm just going to quickly check to see on Financial Juice if there was anything I can spot that happened around that time. Let me just double check. 9... Yeah, I can't see anything on Financial Juice. I'm just looking on another screen. But seeing the way price rejected off of this level, and then if I go to ES for a sec, because it's always important to look at what ES is doing too. ES is rejecting off the daily EQ as well, and the 200. So this was giving me more confidence that taking a short from this level is not low probability. It's not a 50-50 gamble. This is actually turning into a higher probability setup. And that's the whole point. You want to put yourself into trades that are high probability. Now, what happens after you put yourself in a trade? There's no way to tell what's going to happen next, right? Price will do whatever it's going to do. But the only thing you have control over is understanding the concepts, putting them together, and then executing on what you will call high probability. And then let the price do what it's going to do. So I watched price aggressively reject. I thought, okay, this trade's back on the table, right? And I shared that in the thread here. Where are we here? Yeah, watching this on NQ, 942. Then I said it was invalidated because price swept up higher, but then we got that rejection, right? So this is what it looked like at 947. And then I'm just telling you things that I'm telling you now. It's just kind of a recap, but I'm telling you that the 200 MA is being respected. ES is respecting the daily EQ, drawing the liquidities there. I even mentioned how there's an 89% chance that London low gets tagged. Now, if I show you on this chart here, it's right here. So that kill zones indicator, which I use, and I'm sure all of you use, I love this addition to it because it's showing you a percentage of the time that London low gets tagged, within the session that you're in, and it's updated in real time. So it's telling us there's an 89% chance that London low gets tagged today, okay? And if the London low is my draw on liquidity, that's supporting, like I now have data supporting the potential setup. Does it mean it's going to happen? Of course not. But it's all about probability. I keep going back to this. It's all about probability. Find things that add up to give you a higher probability setup, okay? So let me go back a little lower. And okay, then I said, okay. So we have this trade here. This is at 957, okay? Now I said I'm out of the trade. Where did I? Oh, I'm out. Yeah, that happened pretty fast. Wow. Okay. So, okay was me saying there was an update. It wasn't me saying I'm in the trade. I think I mentioned I was in the trade right here. So I said really bad reaction. I'm still in by a thread. That's at 953. Okay. So let's just go to the chart now specifically just to see. Okay. So we get one of these. Now, here's the thing. Look at the closure. Okay. Why did I enter right here after this wick formed? The reason I entered was that all of this liquidity never got swept. Even this candle didn't even get tagged, okay? And because this candle didn't even get tagged, let me just increase the size just so you can see. It's not technically a swing point. The swing point's here and obviously here. But I was like, did this level even get swept? And it just missed it. It tagged the pivot point. Look at the reaction off of that pivot point though, okay? This is the thing. Even though it hit that pivot point, I thought I'm playing liquidity. I'm not playing the pivot point because I'm still going to take this trade. So I entered this trade, okay? Now I had a soft stop loss right here. And like I said, my TP was to, take TP somewhere in this area. If not, just take 1R, right? But this is kind of like what the setup was. Now, in the previous live stream, I talked about having soft stop losses and having a hard stop loss. So my soft stop loss was right here off this wick, this Quasimodo, this liquidity sweep area right here, okay? Now, you have FEGs here, like SIBIs here, and you have the 200 MA here. When price aggressively ripped like this, what I ended up doing was, even though my hard stop loss was way up here, I got really mindful about what I was seeing, okay? Because the first thing is, whenever you have an IFEG set up, seeing price rip through the IFEG and close back on the other side of it is never a good thing, okay? We talk about this all the time. However, I have other areas of interest that can still provide support to the trade idea. The daily EQ being one of them, these SIBIs being another one, the 200 MA being another one, and then there's also this liquidity sweep level right here, okay? So I have what's known as like lines of defense still to my disposal, and I was not ready to give up on the trade and take the loss, even though if it kind of went around again, the 84% rule, I could re-enter. I didn't want to put myself in that position, so I just thought, you know what, I'm going to risk this, and I'm going to see what happens, and if I see a nice solid like rejection off of this level again, because the 200 MA has rejected 1, 2, 3, 4, 5, 6 times already. If it's happened that many times, maybe it'll happen again. Okay, so let's just see what happens. So we get price moving like this. Now we're starting to tap into the higher SIBI right here. Let me zoom in a little bit more just so we get a better view of this. But notice how price is starting to react to this level now. See that? And then you get one of these. So now we're starting to get more of a rejection. So instead of panicking, right, I stayed calm. obviously trading's emotional, so it's not to say you're not going to carry like stress. Of course I'm stressed, but I was trying to use some logic, and the logic to me was like, if this gets lost, I have to manually exit this trade and take the loss, and it'll be a little bit larger than I want it to be. But then for sure I know this trade's like freaking cooked, because now it's inverted these FVGs right here, right? So if that happens, I'm out, and then I'm just going to wait to take a trade higher, right? But seeing that price was rejecting, I then dollar cost averaged into the position. Okay, so if you look at my actual executions, let's see. Let's see where they are actually, right here. So I had my entries here. Okay, this was my first set of entries. And then I decided to add to that position after seeing this candle close. And I entered literally on the close there. So I entered here. So it did increase my DCA. It wasn't as much as I thought it would be. I thought it would have been like it would have helped me get higher, but it didn't really move that much, surprisingly. It just moved it to about here. So that kind of sucked. But nonetheless, let me go back to the chart. So DCA'd here, that means my actual entry is a little bit higher. If I go back here, let me just take a quick look and see where it was. Okay, perfect. So something like this, right? So now my entries moved up here from somewhere that was originally down here, right? And in terms of like the stop loss placement, at this point, like whenever you start getting into DCAing things like this, it becomes irrelevant trying to like determine what's 1R, because like if I took a loss up here, I'm taking probably like a minus 2R loss, okay? But what does that mean? It means like I'm not looking to go +2 anymore on the TP side. I'm trying to like exit this trade in profit and hit my daily goal. So I know the drawn liquidity is here. I know the LR is here. So my plan was that if I see price starting to move in my favor and sweep this, I have to move my stop loss to break even, because I will not lose money on this trade now. Okay, so as price starts to react, this happens, then this happens. Now, even before I was about to set my stop loss to break even, I think I moved it to break even, but then I started seeing LR taken here, and I was already up. Like, look at this. If I was to just measure it from this perspective, like I already realized per my original stop loss, like that soft stop loss, I was already at 1R. And I saw the dollar amount that I had on the table. And I was like, you know what? I really don't need to hit this home run here for 2R or 1R. Like I already dollar cost average into the position. Like there's no need to be greedy. Like I should be lucky. I am lucky, and I should be thankful and grateful that price and the chart gods have allowed me the opportunity to get any sort of TP, because I mean, experiencing all of this is not fun. So I took the TP. It was so simple. I just took it. I was like, I'm done. I'm happy. I caught my W. It's not even 10 in the morning. Live to see another day. Because I know the best IFVGs don't do this. They go quickly to TP. So if I get something like this happen, why am I going to try to be perfect? Why am I going to have a greed problem? Why am I going to try to think I'm smarter than the market, right? Because in this moment, I could be thinking, oh, I outsmarted the market by sniping my entry here to dollar cost average, and now the short's going to run, 200, 300 points in my favor. Like, why would I entertain that idea, right? So I took my TP, hit my daily goal. I'm lucky, right? And then the next thing is I'm locking up my accounts, because the last thing I want to do is give any money back to the market. Always lock your accounts, okay? 10 a.m., my day's done. Imagine just being able to say that to yourself every day if that happens for you. It's such a powerful thing, okay? And here's the other thing. Look at what happens next. Price literally reverses the complete opposite direction. What does that mean? It means if I do not take that money off that table, and I already showed you guys what I did today, and I don't often show this, we're going to talk about this, but like to make this amount of money, and if that went back to break even, like I should slap myself in the face for being greedy. If I did not take that off the table. And in the past, I have done stupid things like this, and I'm sure you guys have done the same thing as me. But if you're able to like accept when enough is enough, and accept that you've been given an opportunity to have a green day, like, isn't this enough? For me, this is enough. I'm happy with that. Like, that's I'm just, like I said, I'm one more day closer to payout, right? That's all it is. I'm one more day closer to payout. Because if this hit break even, I mean, what a shame. Because now there's a stress involved that I have to now figure out what I'm going to do next. Because am I going to try to take another trade? Problem is, looking at the way price is trading here, you are just chopping at the DEQ. This is just barcoded. Like, there's no extremes of ranges being tagged out here. Okay, so I'm going to hit leave here just to go back to what we're looking at. Okay, so does anyone have any questions on that? If not, that's cool. But even still, there's nothing to work with today. I think the only other trade I saw, which if I did not take that trade, I think the only other trade I would have taken, and it is a trade that I shared actually in the Gen chat, because I had noticed it. So I'll go to it in a sec. I didn't share it in my channel, but I did share it here. Would have been this setup. So let me show you guys what I saw. So I shared this right here at 1049. I noticed price dipped onto the DEQ again, found support off the 200 MA inside of that pivot golden pocket again, right? Loads of action happening in this range. Like, it's not fun. But I think there was also bullish SMT that formed there too. So if we go back to the chart for a sec, we're talking about all of this right here, this move. Okay, so 200 MA, daily EQ tap, and if I show you the golden pocket, right there, right? Golden pocket, beautiful. And where is the setup? The setup is basically this. I wonder if there was a 2-minute involved there. I think the 2-minute was definitely a nicer FEG because it's singular. But I mean, this is still pretty good even on the 1-minute time frame. I probably would have just used the 1 minute. So you would have had something that looks maybe like this, could be like this or like this. And then you'd be looking for like 1R, right? Or London high or whatever it is, right? Now, here's the thing. Just because I have it marked like this doesn't mean it's going to just go straight to TP, right? Today has been one of those kinds of days. So if I hit IPG here like this, and I'm just going to use this other setting I have just so I can get my SMT indicator up and running. I just wanted to show you. See the SMT? So SMT forming inside of that pivot golden pocket. There was a 200 MA bounce there, and then we have the DEQ there, right? And then is there an FEG involved? Does not look like there is on the 15-minute or the 1 hour, but there is on the 5-minute maybe. No, not even on the 5 minute. So there's no FEG. That's cool. Doesn't change anything for me. It's just, do we have another stacked level of criteria or confluence to the mix? And no, we don't. So here's the setup. We tag New York high, and if I just show you ES for a sec, ES is already starting to sweep London, Asia, and then an H4 buy side liquidity. So if ES is already taking out liquidity, that means you have to start either taking profit off of NQ, or you have to start moving your stop loss to break even. And given the context of this day, okay, if I did not take this trade down here, or if I had taken the trade and got stopped out break even, and then this happened, I can tell you right now, I'm probably exiting my trade because it's now past 11 o'clock. Do I really want to be greedy after missing taking TP down here. Do I really want to miss taking TP here, right? Because watch what happens. See that? Would have hit break even. So imagine going back-to-back break evens. That's what could have been. But that didn't happen that way because I didn't get greedy down here. So if I had been greedy down here, caught a break even, you cannot be played for a tool or played for a fool again. You just got to be smart. Take the profit. Be thankful that you have it. You don't know what the market's going to do. And it's better to be safe than sorry. Okay? Now, if you notice, price actually ends up retagging the daily EQ again, but we're now outside of the kill zone. There's the 2-minute play. There's the 1 minute. Here's the 3 minute. 3 minute, not that good because by the time this closes, it's way up here. Personally, I would have probably just played the 1 minute. And that's the thing also I'll talk about is whenever you have these types of setups, so like this, like I had a conversation with someone about like, well, when do you move between 1 minute, 2 minute, and 3 minute? And my answer is that I will only move to the 2 minute or the 3 minute looking for a better IFEG if the 1 minute FEG looks really bad, like it's really choppy and price action is not clean. But if the 1 minute is clean like this, then that's fine. There's no need to go to the 2 minute. Yes, the 2 minute might have a tighter IFEG. It might make it from, in this case, this stacked IFEGs are 1, 2, there's 3 FEGs that get stacked or create a series of FEGs into an IFEG, whereas with the 2 minute, it becomes only 2, right? Some people have that type of stipulation with how they trade. I mean, if you move to the 3 minute, it becomes singular, right? But the problem is now your entry's way up here if you're waiting for that candle to close. And like, why do you want to enter way up here when you can enter much lower, right? See how much lower? Even if you entered on the 2 minute, you entered here instead of up here. And then if you enter on the 1 minute, it's about the same as the 2 minute, right? But the thing with the 1 minute setup is that it allows me the opportunity to front run the entry. So if the 1 minute is looking super clean, I actually might be able to get a better entry on this candlestick. Whereas if I'm using the 2 minute or the 3 minute, my preference is to wait for the candle to close just to make sure. But if I waited for the 2 minute, my entry would have been here. But if I waited for the 1 minute closure and front run the entry, maybe my entry is like somewhere around here, right? It just depends on how fast that candle's moving and how much time is left on that candle closure before it confirms. So now I have potentially a 40-point stop loss, and my TP is literally, here's your nearest draw liquidity, right? There's your 1R. Keep in mind, this is just a review. It's outside the kill zone for me, so I wouldn't have taken it, but I just try to put the dots together, show you the process, show you the system, show you how the mechanics are repeatable. I think when you understand the risk involved, and how I kind of manage that risk. So this is why I'm really being meticulous in explaining it this way. You're probably going to have to watch this back again. I would think. I can't tell you how many times I've had to replay sessions over and over and over again to understand my own trading risk and theory that way. But anyways, pretty good reaction off that level. Once again, golden pivot pocket right there. And if I show you the 200 MA. See with the 200 MA? Solid. And it's not to say it has to be perfect. It's not about perfection. It's just about using it to stack confluences together to support a trade idea. That's all it is. If anyone has any questions, drop it in the chat. No problem. Tracy, I know you had asked about settings and things like that, so let's quickly talk about it. So here's the envelope filter. If you go to indicator and just type the word envelope, it's right here. It's a built-in indicator, okay, from TradingView. Here's my settings. Inputs, 200, percentage, that's that deviation, 0.5. I'm using the simple moving average. I'm not clicking this off to have it as an exponential. My time frame is always going to be set to 1 minute. I only want to see what it looks like on the 1 minute, because if I set it to chart, it's going to change depending on the time frame I use. So even if I move to the 2 minute, 3 minute, 4 minute, 5 minute, whatever, it will still always show me the envelope filter per the 1 minute chart. And then in terms of stylings, I mean, it's up to you how you want to make that look. There is a background that's usually affixed to that, but I have it turned off because I don't need it. Okay, so that's that level. If we talk about the pivots, so here's the pivots set to traditional. There's a whole bunch of other ways you can use this. The other really popular pivot point people have used, I've seen traders use, is the Camarilla, but I don't use that. I'm just using traditional, and I have it set to the daily time frame. I only want to see the current pivot. I don't need to see anything else. And then I don't need to see the labels. But if I set the labels up here, you'll see that they'll pop up in a sec. Maybe, maybe not. Oh, wait. I just realized why. This is the golden pocket part. So if I just move to the... We just go to the 5 minute for a sec. I'll just be clear. There you go. So you can see here, you have R1, R2, pivots. Now, I will tell you, the way I use pivot points is not exactly traditional of how other people use pivot points, because the pivot points is a trading system in and of itself where people use like R3 and R4. And then they look to use that as kind of like, you know, like levels to short off of, back to the central pivot type thing. So it's kind of like that mean reversion idea. I'm using it very differently. I'm using it more so for like support and resistance. Okay. But just wanted to show you, that's what it looks like. And then, I mean, like I said, my settings are pretty much default. It's just the way my indicator, the colors and the way they look, right? So if I hit this to reset savings or reset settings, this is what it actually looks like when you put it on your chart. It looks like this. Nasty little orange lines, loads of levels. But the way I have it set up, if I hit my setting again here like this, it ends up looking like this. So I prefer looking like that. The other thing too is what I'll do is I'll also toggle off these levels depending on what we're getting, right? So like if I know we're not trading at S1, S2, like why do I even have that on my chart, right? I often talk about when you have things on your chart, you should only keep them on your chart if they're helping you. If they're just causing confusion and you know, a big mess, take it off your chart. It does not need to be there. So for me, I only need these. So that's why I would only just keep these on there. Now, if price started to move lower, then I can activate it and clean up my chart and then remove some of these higher ones, right? I'll just make this a little bit bigger again. So yeah, that's basically the levels and the settings. Steve's asking me if I can explain the golden pivot pocket. Yeah, I mean, like I said, it's really straightforward. If I have price trading inside of any of these ranges, all I'm going to do is just, you know, anchor the golden pocket, right? So golden pockets are, if I just show it to you, like, let me show it to you this way. You just turn off this and this. Okay, so let me show it to you like this. So okay, so Fibonacci. If you go to OTE, which is optimal trade entry with ICT, basically ICT uses OTE with kind of like that 2022 mentorship model, right? Where price has a liquidity sweep, then we see displacement. You know, we often refer to these like unicorn models and things like that, right? But then what happens is it leaves behind an FEG on the right side, and then when price retraces, that's the anchor you're looking for OTE, okay? So that's OTE, but this is Fibonacci. The golden pocket is basically, in theory, the golden pocket is 0.5 to 0.618, okay? So if I just shift this to what it actually technically is, this is the golden pocket. 705, 79, 88, these are all ICT related types of levels that you can use. But that's where it turned, like 705. This is OTE. That's the optimal trade entry, is around that 705 fib, right? 79 fib, somewhere in this area here, right? But if we go back to, like I said, the more traditional perspective, 0.5 to 618, that's your golden pocket. So how do I use that? All I'm going to do essentially is I anchor the pivot points to create a golden pocket. So if we are above the central pivot, what I'm going to be doing is I'm looking for golden pocket, and I'm anchoring from top to bottom. Right? So to look something like this. Let me just clear up some of these things. So let's get rid of that. Let's get rid of that. And let's make the color purple. Just trying to find a nice color you guys can see things with. Okay, so let's use this. Right? So essentially what happens is, wait, why is it doing that? Okay, there we go. So I left that in there. 088. That. Okay, so I'm basically anchoring the high to the low. Here's your golden pocket, right? It's just basically like that. So this is what it looks like. The way my setting is I'll have it set like this. And that's it. That's how I anchor it. And then if I want to measure out the exact numbers, I'll just go to coordinates on the fib, right? 29, 452, 75, perfect. And then this one is 29, 61625, and I'll just do this, and then I'll lock it so it doesn't move. And now I have a key range right here. So super valuable level or range that I use. It doesn't mean price is always going to hit it, but I find it works the best when you don't have chop like this. If I go back to yesterday, let me just get rid of all this stuff for a sec. And this. So like this is yesterday, right? Here's New York. If I show it to you like this, so if the center pivot, excuse me. Okay, so there's S1. So S1's here, and the pivot's there. Price is moving below it. I'm going to use an anchor from the low to the high, like this. Okay, so what I have now, and I want to just show this to you because this is actually really cool. So this was yesterday. I'm on the 5-minute time frame just because it's easier to show to you this way. But pre-market, look at where price taps right into. See that? S1, central pivot, golden pocket. Boom, right there. Is there any other key levels there? Now you'll remember yesterday I took a trade, right, from here. You guys remember that? If you go back through my personal channel yesterday, you'll notice that I did take a long pre-market. And a lot of my rationale was that we had that London low that got swept, right? S1... Right, so that S1 actually was a London low. If I go to the 1 minute. But look at how price respects that golden pocket right here. See this? So we knew we had that news at 8:30, right? Which is pretty much about here. And we were looking for that data setup. And then we get the sweep of London. And then price starts moving here, right? So I was really watching this. And I have some other reasons, but I just wanted to show the golden pocket. Like it's right there. If you just start going back through your charts and start taking time to put it on, you'll start seeing the same things I'm seeing. But I use it as an additional piece of confluence. It was a big reason why I stayed in that trade. I had entered around like 9:15ish, and I stayed with it, and I thought, let me risk it because I know this area is a good area for price to bounce off of, right? But this is how, like, ideally I like to see price move off that pocket. I like to see price move away from it and then spike into it. Similar to like the daily EQ, right? Like we like seeing daily EQ plays where price moves away from it and then spikes into it. It's no different, because if price chops at that level, then it's not really like respecting. And if it's not being respected, then that means it's not really giving you the edge. It's not giving you a higher probability. But when you see price spiking into it and then having a good reaction, well, you got a high probability situation right there. So I really like that. And it worked. It was nice. But yeah, go through your charts, check it out. It's pretty neat. Let me go through my notes just to double check. So we reviewed the trade I took today, reviewed that call-out trade. We kind of have talked a bit about mindset. We'll talk about it a little bit more. The other thing I just wanted to do is just a quick top-down analysis, like using just, the foundational core concepts. Yesterday, I had actually shared a setup. Where would it have been? Here, let me make a note. See if I can find it. Bear with me, guys. Let me see if I can find it. Right here, perfect. Okay, so right here, this would have been yesterday in the evening. I was just doing some studying. I'll be honest with you guys. I've often talked about taking breaks from the chart, and I strongly support that. But at the same time, I honestly think if you're a student of the game, like, you gotta stay sharp. And if you have the opportunity to just study a little bit in real time, like, you have to take that opportunity, especially when you have an active kill zone working with price action at the the levels and stuff. So I thought, let me do a quick little Asia session study up. This was yesterday, and this is similar to what we're going to do right now, which is like, I wanted to know what the higher time frame was telling me. I wanted to see what the 50-minute was telling me, and then I wanted to know what the 1 minute was showing in terms of like the CISD entry structure or entry trigger, because I know not everybody trades IFVGs. There's a lot of people that are also trading CISD, and truth be told, I mentioned it right here. I said I trade IFVGs currently, but my futures trading and ICT foundational IQ are actually from years studying Ash, because he was trading the unicorn model more specifically, and now it's kind of more shifted to get a better optimal entry with CISD structure. And I agree. I really do prefer the CISD over the unicorn. And the thing is, like, any unicorn that confirms has a CISD anyways. But the beauty with the CISD is that you don't need that FVG inside of the breaker block to confirm a setup. All you need is that line in the sand with liquidity sweep and SMT, right? That's it. That's all you really need. So I kind of love that foundational IQ that you guys are all learning too, right? But I wanted to just continue to put it to work. So yesterday I noticed H4 IRL to ERL. I'll just share the picture. Here's the H4 IRL. Price swept into that. And I thought, okay, well, there's your bias. You're bearish. Is there a 50-minute market structure that aligns with it? And there was 15-minute buy-side liquidity that had got swept around here, and there was a failed setup. And the reason I didn't mark that is because, and then someone was asking me about it. If you just go back to the chat, you'll see my response. But I'll explain it to you here. It was super easy. The reason I avoided that in my study, when I was like, oh, I wouldn't take that, is because there was no SMT. SMT is like a mandatory piece of confluence that you have to have, in my opinion, with this type of model, like the CISD entry model. It just improves your hit rate and provides such a necessary filter. So avoiding that setup that happened here, right? Because I'm sure you can see there was a CISD here, just barely. That fails. And if I zoom in, actually, it'll be a lot easier to see it, right? So right here, there's your CISD. It fails. Then price moves a little further. Here's another CISD, and that fails, right? I mean, maybe you took some TP, but ultimately there was no SMT. Then what happens is price moves into a 50-minute FEG, bearish FEG, and creates SMT. Now, once you have those criteria in place, here's your CISD, and I did this on my phone last night. This is how you can do this on your phone. It's that simple. Here's your CISD, here's your entry, right? Price just confirms order. You can mark it in or set a limit. I think I would have just market ordered in. Stop loss goes at the protected swing. And where's your TP? Well, when it comes to this type of trading, you can go with 1R. There's nothing wrong with that, right? I always use 1R when it comes to IFEG trading, so there's nothing wrong with that. But if you're looking to play market structure is showing you have an unmitigated NWOG right here. Here's the gap. You have a massive NWOG, unmitigated, okay? If you're going to take partials, sure, you can take partials at the LR here, another one here, and then maybe your full TP is in here. Or, I mean, if you got the nerve to do it, you could just wait and take TP all inside here. And this full move was 5R. And it took about an hour. But those concepts, when you put them together, are so important. So we're going to do that right now, except with what happened today. And I have no idea what price did today with this type of thinking. I'm going to clear the chart. We're just going to quickly review what it looked like and how, my read on it would have been. So let's just check it out quickly. So here's Thursday 2 to 6, and then here is 6 to 10, okay? So what's happening? Let me just move it back one like this. Okay, so this is what we're at, 6 to 10 right here. So with this price action, we always want to use the most recent pieces of information that we have. Okay, so the two most recent pieces of information are this 4-hour FEG, okay, right here, and we also have a swing high right here, H4 buy side liquidity. So if the 2 to 6 a.m. candlestick delivers from internal to external, what that then means is that this shifts down here now as being unmitigated, and you now have external to internal being the move. So I would actually have been looking for a short today, personally. I wouldn't have been thinking to go long. So that's my bias. External to internal, I'm looking at a bearish bias. 15-minute market structure. Do we have a 15-minute swing high that gets swept? Do we have a 15-minute SIBI that gets tagged into? Let's take a look. And this has to happen at 9:30. What do we have at 9:30? So here is 9:30 on this candlestick. We have a 15-minute level here. Buy side liquidity. And do we have an FEG? Nope. I thought there was but there's no FEG here. So it's just that 15-minute level that we're dealing with. Okay. So at 9:30 to 9:45, price moves up. We got a lot of price action moving lower, but price moves up, but we don't get the sweep. The sweep actually comes on the falling candlestick between 9:45 and 10. Let's zoom in a little bit more. Okay. And the other thing I'll do is just quickly turn on SMT indicator. Do we have anything here? Nope. Do we have anything on the 5-minute? No. Do we have anything on the 1-minute? Let's go back here. So when you're looking at this now, here's your 15-minute sweep, right? You have a liquidity sweep there as well. Got some alerts firing off here. Let me just quickly take a peek what we're dealing with. Oh yeah, price is moving up here. Okay, cool. So here's your liquidity sweep, and that would then mean your CISD is way down here. So this is not ideal in terms of price delivery, because you ideally want that CISD to be higher, right? You ideally do. But if we're kind of going with the mechanics of this, there's your setup right there, okay? Now, how does this play out? Stop loss goes here. Maybe you're going for 1R. You're looking for that drawn liquidity. Drawn liquidity is right here. Okay, so now you start getting something like this happen. Okay, now in terms of trade management, this is what's going to vary from trader to trader. Some traders are set and forget. If you're doing set and forget, then this is hitting stop loss right there, right? This is hitting stop loss. If you're someone who's moving your stop loss to break even because you're seeing bullish SMT now form on the other side, then you're going to exit on break even. But here's something I'll just remind you about. Was this trade valid? Was this short trade valid? The answer to that is no. And why? We talked about this at the start. I talked to you about how there's always going to be potential setups, but you need a filter to keep you out of some trades, to protect you, because it's the difference between low probability and high probability. What was that one filter? SMT. There was no bearish SMT formed at the time of the trade entry. See? There's no SMT formed. So that means this trade is technically void. You shouldn't have even been in this trade. Okay, so we're marking it. I'm showing it to you. But technically, there's no trade here. So what does that mean? There's no trade? Well, you got to wait for the next level to get tagged. Okay, so until this H4 FEG is tagged, the higher time frame delivery has not been fulfilled. Okay, so if the higher time frame expectation or objective hasn't been filled yet, you're still looking for shorts. So we know we have this level here. We know we have this level here. And now, because of the way this candlestick printed, we have a level there. Okay, so this is now the 10:15 to 10:30 candlestick. Let's go to the 1 minute time frame. Let's observe what's happening here. And like I said, I'm not trading this model, but I'm analyzing it and I'm studying it because I do find value in it. So 15-minute level gets swept here. You do have the liquidity sweep right here, right? Because you have an institutional high and you do have a low here, so we can use this, which would then mean that this right here becomes your CISD. And once again, do we have SMT or not? That's the real question, because that's the filter that I would be using on whether to stay or whether to take a trade or not take a trade. So you can use an indicator to do this, or you can actually go manual. So like if I was going manual, I can see that there's still no SMT here. If I go to NQ, yeah, all looks the same, right? So there's actually no SMT there. Let's see what the price delivery did though. So we ended up getting price delivery. So your setup would probably look something like this, right? Now, am I asking you to take your TB all the way down here? I'm not saying that. Does this hit 1R? It does hit 1R. But like I said, there's no SMT. So you got to be careful with engaging that. So I probably would have not taken that based off those rules that I've set for myself and how I would execute something like this. Let's go back to the 50-minute, because now we got to wait for another sweep. So now you have the high up here. Let's go back to the 1 minute. because we're still bearish. And if a specific time gets hit where you're outside of the kill zone now there's no trade. So for me, this is now a no trade day. This is what a no trade day looks like. We had a couple of setups potentially form, but do you see how the filter, the SMT, the lack of SMT keeps you out of 2 trades? One of them being a stop loss, the second one being, I mean, it ran 1R, but like you didn't get that full delivery, right? So it did keep you safe, depending on if you're looking for 2R, right? Or if you're looking for that full delivery. Or maybe you skim some profits, but nonetheless, it still kept you away from this choppy price action. Now, let's keep looking, okay? Because price then does start sweeping outside of that 11 a.m. kill zone window. Some people trade, these CISDs, to about 11:30. I used to, when I was doing unicorns and stuff like that, I would take it to about 12 personally. I would really push it. So if we're going to push it, let's just push it. Let's just see what we're dealing with, okay? So is there SMT here? No, there's no SMT there. But we did get that sweep. But once again, look, I just want to show you what I'm talking about. This filter is so powerful. Just the SMT filter alone. Look, you have a sweep here. Right there. And then you have your CISD right there, and it does actually break the CISD right here. But then look, stop loss. See? If you don't have SMT, don't go in the trade. Simple. Just stay out. Wait for SMT. Let's keep going. Okay, so now we have another sweep. Sweeps both of these 15s. Let's delete that one. Okay, is there SMT now here? Okay. Now there's SMT there. Now you'll notice I'm not using higher time frame SMT, I'm using lower time frame SMT, but it doesn't mean you can't move up time frames to get more information. The thing is, we had already looked at the higher time frame and noticed that price hadn't created higher time frame SMT because it would have already formed. We didn't see that, right? I can keep going. You'll notice it's not there, right? Nothing there. So all you can really do now is use lower time frame SMT. So now we have that same bias, H4 ERL to IRL. We have a 15-minute sell or buy side liquidity level swept. We are outside of the 11 a.m. window, but we're still before lunchtime. Here's the liquidity sweep. Let's analyze what happens here, because I don't know what's going to happen here. Here's your CISD. Okay, there's a close. Starts sweeping out LRLR here. Now you have bullish SMT. And then this trade just cooks. So you see the impact. The whole reason I'm doing this is I just wanted to show you the impact of SMT on this type of model and how important it is, because I notice people who don't use the SMT take a shitload of stop losses for no good reason, and just by simply having the SMT a part of the equation, do you see the difference in price delivery? I showed you the whole session. I have no idea what was going to happen. It's not premeditated in terms of me, like, I didn't do this beforehand. You will remember we started the live stream at 11:30. So there was no way, I had time to go back and start doing this. So it's not like a magic trick. I'm analyzing this on the fly. I think one thing I will tell you, which I find very interesting, is the entry itself, okay? I think that part is so important because a lot of people that take this type of trade will set a limit order at the CISD, and how terrible of a feeling it must be to miss getting tagged in on this, and then this thing runs how many points? Let's hit X. I don't even know where we're at. Look at the reversal. Crazy. This thing ran almost 100 points from that CISD with where this SMT was located. And now we create another SMT at the low here. Maybe there was a key level there. Let's just take a look and see. So I see a 15-minute level there that got swept. And, you know, the thing is with the market structure, I will say, it's good to play off that 15-minute level because the trade is set up off a 15-minute level. So you should be looking for opposing 15-minute liquidity, right? The H4 bias is just giving you the trend direction on the higher time frame. It doesn't mean you have to wait. Like, it doesn't mean price is going to deliver to that higher time frame objective. It can, of course, but it doesn't mean it will. I highly recommend use the 15-minute market structure to align not only just the trade itself, which we do, but also use it to gauge your TP. So if I know the 15-minute has sell-side liquidity right here, let's go back to the 1 minute. I should already know the second price hits this level, I have to be taking profit, moving my stop loss to break even. Now let's just say you market ordered into this position. Okay, let's just talk about that for a sec. So up to this point, it gives you about a 1.7R, 1.74 RR, 1.7R. Let me mark this off. There you go, 1.75. Not bad for a day that looked as shitty as today looked. And I'm positive you're gonna, if you go on Twitter, you're gonna see a lot of people talk about how this session was garbage. But it really goes to show you that no matter what model you trade, if you stick to a certain set of principles and rules, you can actually still find a trade. And I just showed that to you right now. The only caveat to this is your entry model or the trigger or how you're executing. Because if you're looking to take that CISD limit entry, you miss the trade, right? Unless you're catching some sort of a pullback to this level, right? So like, let's say you missed the limit order here, but you know this is the confirmation candlestick. Price starts to go lower. Look at where it tags. It comes right back to that confirmation candlestick and then melts, right? This is where you can start using Fibonacci even to measure out like 50% levels and things like that. Now, I'm not sure if it actually hits the 50%. It just misses it there, actually. Would I have used that? Yeah, it looks like it just front runs with hitting the 50. Because sometimes what'll happen is you get those 50% retracements or pullbacks, and then price continues delivering. This is very indicative of the TTFM, like that fractal model type idea, market maker model, whatever you want to call it. In my opinion, this is how I would play a CISD entry structure. So in the Asia session that I showed you yesterday, and I also talked about today, I'll just go back to it quickly. You see how close this candlestick closes to the actual CISD line right here? See how close that is? A market order entry is perfectly fine in a situation like this. A limit order entry is perfectly fine in a situation like this, okay? On a situation where you have a candlestick that dumps like this, in my opinion, the best way to go about this is I would enter this position. So let's say I was willing to risk $300 on this trade. What I would be doing is I would enter this position with $200 right here. Market order, I'm in. My secondary position, which is that the remaining $100, I would look to see if this thing claws its way back up here, and then I would enter full size. Now I'm in full size position. It allows my dollar cost average maybe to be somewhere like around, I don't know, it could be somewhere around here, right? But the point of the story is you're in the trade no matter what. And the reason you're in the trade no matter what is because you don't know if you're going to get that limit entry trigger. Imagine setting this whole thing up like I just showed you. Imagine being so patient all morning long. No SMT, no SMT, no SMT. And then finally, there's my SMT. There's my liquidity sweep. There's my change state delivery. And there's my confirmation. And there's no limit entry order. And the price moves 66 points to the nearest drawn liquidity, 50-minute sell-side liquidity. There's a perfect trade gone down the drain because I'm using a limit order. I use market order entries in IFEG setups I dollar cost average into my plays like I showed you on that first setup today. I did that when I saw more confirmation. This CISD setup, in my opinion, is no freaking different. You should definitely be using a market order entry with a DCA approach. I think that's the best way to go about it, but you have to gauge it based off of the distance of where the candle confirms. Because if I was looking at yesterday's Asia session play where price closes right here, I'm going full position size on my first entry. Why would I even set a limit order? This is my line in the sand, and it's so close to it. Market order entry all day. Just do it. And the NWAG, of course, down here is an obvious magnet for price. So even though that's the higher time frame objective, and I talked about using 15-minute market structure to take your TPs because you just never know what's going to happen. I think in situations like with Asia, you got to skim profits and ride the trade for as long as you can. But I think when it comes to New York session, you don't know what price is going to ever do. It's so freaking volatile that you don't know how price is going to deliver and where price is going to reverse from. This morning I was targeting London low and it was like pretty close to hitting it, and then it just decided to not hit it. Right? Same like right now. Look at where London low is, right, or London high is, and it just decided to not go after it. These things are going to happen during New York session more than they're going to happen in London or Asia. Look at the chop here. Another thing I'll talk about quickly, and I'll come back to this, is the overnight range was just about 500 points, and that's pretty big for overnight range. And what does that mean? It means when the overnight range is really, really wide, you can expect a less volatile, meaning less impulsive New York AM session, meaning the range, don't expect a range of 500 points on NQ during New York AM when you see an overnight range that's 500 points. Expect something like this, right? So see the range, 199 points for that range. And then once again, just going back to the setup itself, the textbook plays work, I'm telling you. H4 bias, keep it simple. If the H4 is neutral, that's fine. Use the 50-minute market structure to your advantage. Start using maybe the daily EQ to help you gauge the play. If the H4 is unclear, use the daily EQ to give you your bias. Start using other types of market structure like the 1 hour or the 50-minute to gauge the setup, right? Because right here, there's a 1 hour buy side liquidity level that got swept right here. It's literally the same level that this setup forms off of anyways. So if the H4 is unclear, shift to the 1 hour market structure, implement the daily EQ, take your same trade. Wait for the SMT to form. Once the key level is swept, look for a liquidity sweep, like a very clear liquidity sweep. Look for your chain stay delivery, but most importantly, look for the SMT. You get that, the rest is like I just showed you. The rest is magic. The rest can work. It's a completely different trading model than what I trade, but I know a lot of people do trade CISD, so I wanted to reflect upon it and share my 2 cents about it and share how I would be trading it if I was trading it. To me, like I said, this is the foundational knowledge that I learned from Matt, especially when it comes to ICT. I knew nothing about ICT when I found Matt a couple years ago. So my best advice is to study up what I just showed you there, those key concepts, and eliminate all the other noise. You don't need it. Honest to God, you don't need it. Keep it simple. I see a lot of people doing all kinds of weird things with all types of different types of concepts and measurements, and I'm showing you don't need it. You really don't need it. The key thing with ICT is liquidity. Identify where the liquidity is, wait for it to be engaged with, and then execute based on those other types of principles. Yeah, Steve, this is being recorded, man, and I hope it doesn't glitch because I think it's a pretty good session, if I say so myself. But yeah, I really appreciate everyone being here today. Thanks for sticking around. I think I've covered everything I wanted to cover. I think the last thing I'll just cover, I appreciate that. Thank you so much, brother. I think the last thing I want to cover is just this Okay, it is a mindset piece. I personally find, like, I know we're in an industry where people love to share how much they're making, and we see this on Twitter. And yeah, I know people are probably trying to build, their influencer brand, and get the mentorships going, and get a private Discord going, and get subs and teach people and make money. I totally understand that. I think there's nothing wrong with it. I think in this day and age, like, if you have a skill that you are good at, and people want to learn from you, there's nothing wrong with creating a service out of it. But what I will say to you is, when you are constantly sharing your PL and you're not showing your methods, it gets a little tricky. There's like a gray area there, because I think showing people, you're making $20,000, or even me just showing you I made $1,600, like, it can create FOMO for someone that's clearly trying to achieve whatever the next person's trying to achieve. And I think that FOMO is unhealthy, because now what happens is, the people who are learning from you aren't like learning from you to learn how to fish. They're learning from you because it's like out of FOMO, and that leads to just copy trading. And exactly, Tracy, you said it perfectly. It does create FOMO and makes learners feel like they're far behind. This is why I don't share money like this often. And if I do, there's a reason why I'm sharing it. Because today I saw what was there, and I was like, you know what? This made me feel something. I felt humbled. It reminded me of Christ. It reminded me of things I've read in the passages in the Bible, and just how we help people, and that type of idea. And it got me in my feels that way, and I thought that's why I'll share it and talk about it, because I also had the live stream too, so I thought it was a perfect platform for this. And I'm not trying to make this biblical by any means, but what I'm trying to say is that I had a humbling feeling that I know how hard it is, because I still have a day job that I work, and I know how hard it is to earn a living per hour working a job. Most people work jobs they don't even like, but they have to, because it puts a roof on their head, it pays their bills, puts food on the table, it dresses them, you can fill up gas, right? Things like that for your car. Like, I get that. But this is where the humbling piece comes in, because I realize, like, first off, there's all of that, making this amount of money is like, somebody has to work like a full week of work, 9 to 5, could be 40 hours worth of work, maybe more, just to make this money. And that's one thing. Second thing was that this is American money. I live in Canada, so this isn't just $1,600 to me. Like, that's $2,200. Like, that's a lot of money, no matter where you are in the world. And I know I'm put a lot of work into learning how to trade. I've failed so many times. I'm still failing in a lot of things in life, just like just like anyone else is. But that doesn't mean you stay down, right? It means you got to get back up and keep trying. So when I see things like this play out, and I get lucky in the sense that price does go to TP after experiencing all that drawdown, you got to take that money off the table and be grateful that you got what you got. Because if we start playing the game of, like, it's like, I'm looking for that 1R, and you're so, or even 2R or whatever it is, and you're like so fixated on that, the market actually doesn't give a shit about that. So if the market doesn't care about that, then you need to care about taking that off the table. Pay yourself. A while ago, I think it was just the past weekend, I mentioned to everybody that, hey, you should read this book. It's called The Richest Man in Babylon. And I highly recommend this book to everybody. Let me see if I can find it. Babylon. Right here. I mentioned to everybody, I said, hey, read this book, The Richest Man in Babylon. Okay? And the reason I said it was because, like, one of the main core lessons to this whole thing is pay yourself first. Pay yourself first. The lesson learned is, like, pay yourself first, like a tenth of what you make, and then the 9/10 of what you've made, reinvest. But pay yourself first was the thing. And it got me thinking about, like I said, like what's happening right now with the way I was trading today and the money I made. I was like, I'm paying myself first today. Like, I'm not waiting for this. I don't care if this even goes crazy fully to TP and beyond. This is enough for me, man. Like, I'm happy with this, and I'm now one day closer to a payout, right? Like, things like that. So you gotta shift your thinking that way. Otherwise, you're gonna keep running into situations where you keep giving back the money you make or that you've left on the table. And I'm telling you, you do that once in a session, you're gonna have like that, like being held over your shoulder on the next trade, and it can really screw you up and make you make bad decisions and make mistakes. Vidal says, yeah, my position today missed 2R by 2.25 points on NQ, then went straight to stop loss. I mean, there you go. And I'm sorry that happened. I hope you're able to either get out break even or skim profit. But I mean, that's a great example of what I'm talking about. Like, the market doesn't owe us anything. So if the market gives you, don't get greedy. Understand where your daily goal is and make a limit. And this is what I found has really helped me in trading, was when I told myself, okay, what is my daily goal, like from a monetary perspective when I show up to trading? Like, what is the range that I'm looking for? So let's just say, you know, your range is $100 to $300. Okay? Forget the copy trading for a second. Focus on just one trade. So, like, let's say your goal is to achieve $100 to $300, and now you see $150 on the table, but you haven't hit 1R. And you've had a shit day like the one that I showed you today. How it was like not a easy or fun day. It didn't come easy. Will you take $150 off that table? You have to learn to answer that question for yourself and come to terms with that. The minute I was able to do that, that's when everything really starts to shift, and now you start stacking green days. That's truly stacking a base hit. Because in the prop firm business, who cares about your RR factor in a prop firm business? What you're trading? It's irrelevant. This RR glorification, over glorification, is an illusion. It is like, you know, the apple in the Bible, right? That you should not be touching and not be eating. Like, don't get lost in that mess. Don't get lost in the RR. I know from a mechanical perspective, you'll look at your journal and go, well, you know, my hit rate and my percentage and this and that. Like, I understand that part. That's part of the mix. But, like, what's the point of trading? The point of trading is to take profit from the trades you take. It's not about being perfect. It's about being green on the day. Stacking up green days. Because you know the best trades that you take aren't going to cause uncomfortability, disruption, FOMO, panic. The best trades don't do that. And if you know the best trades don't do that, and price is doing that to you, then you already know what type of trade you're in. You're in a tough trade. And when you're in a tough trade, you now need to play defense better than you're playing offense. No matter what happens on the other side. If, like today, for example, I took that trade, I showed it to you. I took TP early, and I did not give a shit. I did not care. I still use logic in why I took TP, right? I told you my daily goal was hit. We already had swept LRLR, so it was either I take TP or I move my stop loss to break even and see what happens. And I said, you know what? I experienced all of this pain up here. Thank you, God, for giving me this opportunity to have a green day. And guess what? My day's done at 10. And I get to live to see another day. So I feel like if we can all kind of exhibit more patience and grace with ourselves, if we can exhibit more, if we can exhibit less greed with our approach, you're going to just have easier outcomes in the future. And I'm not saying you're not going to lose trades. Of course, you're going to lose trades. I'm not saying you're not going to make mistakes and lose trades that way either. I did. It happened to me earlier this week. The key is not about that. The key is like sticking to a set of rules, plans, risk management, like strategy, and executing every day the same way based off those principles. Like I said, I took this trade. I saw a nice reaction off these key levels I liked. I entered with a DCA position. My goal was to exit early. The second I saw price starting to take out the LRR here, if it started to stall, or depending on how I felt, if I saw strong momentum move right through here, then my TP, the limit that I had set around here would have just been activated anyways, right? It's a win-win if I just stick to that plan and not let the FOMO and the greed and that type of mental load take over what I know I should be doing. I swear to God, go back to your journal, look at some of those losses you've taken, the ones where you got it right, and you'll see like you could have taken TP off the table probably, and you just didn't for whatever your reason is. So go back and study that and figure out your miss there, and then figure out ways you can like not repeat that mistake. Because like if you can start to avoid those types of things, you'll end up with more green days than red days, and that's the point. Just have more green days than red days, and you're going to be fine. Hardbowler says, I was up 900 and didn't take anything, only to get stopped at break even, locked my account ASAP. Once again, $900. $900. Like, it's crazy because in this trading world, we know the potential to make a lot of money is there if you know what you're doing. And a lot of us know what we're doing, of course. But what happens is it distorts our perception about the value of $1. It's like, I used to go through this with crypto. When I was in the crypto market, everyone's like doing 10x, 50x, 100x on their investments with these crazy meme coins. And it's like, you look at the S&P and it's like, you know, if you can get 10% in a year, like that's amazing. 10% in one whole year. That's amazing. If a stock can move 10%, 20%, 30%, that's amazing. Nobody's looking for 10x, 50x, 100x. This is like, it is a very dangerous way to think. And when I think about the correlation of that into the futures trading, it's the same thing. It's the same thing. You're up $900. You're up $1,600. Some people have been up, $20,000, and it's like they don't take TP because they're looking for more. They're looking for that full TP to hit their, per their plan. Like, I got to hit that level, 1R, 2R. And it's like, wow. I feel like if I ever got to that situation, like, I don't know if I'd be okay with like looking at myself in the mirror. And it's not a judgment on anybody else. It's a judgment about myself. Like, I would not be able to look at myself in the mirror because, like, I think about my family. I think about, like, my in-laws who run a business and they're still not retired. And they should be retired. And they're working every single day. And I'm looking at what I just made today. And it's like, there are levels to this life that we live. There are a bunch of you in here right now listening to me talk about all this stuff. And, like, honest to God, you have a special ability to trade. You have a special calling to make something of yourself through trading. Some of you already are changing your life through trading. Don't take it lightly, honestly, because if you look at the next person in your family, like who's close to you, and look at what they do to make $1, like, we are very, very fortunate that all this A makes sense to us, and B, that we're able to put the dots together to make it work. Because it's not easy to make this work, but at the same time, it takes a certain type of person to make it work. And the ability to go through all this pain. Because what's the point of having everything if you don't understand like the pain involved of getting there, right? When you start to really understand how much sacrifices you have to make and then you are at a point where you're successful, you don't take it for granted because you know where you came from. You hear this with everybody who's successful, right? And those who are very successful that had things handed to them, I mean, it's different. It's different. But I know for a fact every single person here who's a trader has gone through max pain, maybe still going through max pain, but there's people who have gone through the max pain and have found their way on the other side of it. And like, I know you can draw from the max pain to be humble about what's happening. And like I said, just take your profit. Don't get greedy. Don't get greedy, honestly. Hardbowler says it really hurt, but I know the next thing I will do is go on tilt and blow up. And, you know, that's a smart move, man. Lock up the accounts because, and I had said that earlier, right? Imagine you see $1,600 on the table and I don't take TP, and then now I'm carrying that on my next trade. And the other thing to that too is like how much clarity and focus am I able to execute with on that next trade? In theory, I can say, oh, I'll be fine. But emotions have a funny way of, you know, rearing their ugly head because they come at you in the times where you least suspect it. And then that's when our bad decision starts happening, right? So, and he says, just recovering from a long losing streak and I demanded more and realized small wins count. And, you know, the thing with that, too, with a losing streak is when you have a losing streak and you're trying to still show up every day, which is, I applaud that. Good for you. Good job. You got to dig deep. But if you start seeing small wins appear, take the profit off the table. Pay yourself first. Stack up those small wins. Break your losing streak. You know how important it is to just break a losing streak mentally? Even if you just made 0.5 RR of what you were going to risk in the first place, taking that little small win speaks volumes to what you just gone through. Because let's say you had a 5 trade losing streak, and now you have an opportunity to break that losing streak, but it's not your full risk, but it's good enough. Take it off the table, pay yourself. Now you have positive momentum. You've broken all of that negative energy that maybe has been following you. And then I'm telling you, the weight will be lifted off your shoulders. So I'm sorry to hear that happen to you, brother. The good news is you have time to reflect. You have time to do something that fills your own cup. And there's always another trade around the corner. And we often forget this as we're so used to trying to make payouts, trying to pass evals, time limits, those kinds of things, right? So remember, there's another trade around the corner. There's always another opportunity to trade. But you have to be smart and disciplined about it. You got to have the ability to experience delayed gratification. And I'll just end by saying, have grace for yourself in this trading space because it can get very ugly, where you will really, really feel max pain. But that max pain is what fuels the success that you only dream about. Because if you don't experience max pain, then you have nothing to fuel where you want to be. And that will lead to feelings of those feelings of, what am I trying to say? You'll feel invincible if you're not able to experience max pain, and then you're going to get really humbled. And then that's going to be really, really hard to come back from. So we need that to fuel, like I said, the success that we want in ourselves. It's no different than if you go to the gym and you're working out and you're digging deep on those last few reps. right? To get that last little burn. I used to do this a lot with curls, like bicep curls and things like that, where you do like 8 or 10 reps, and you're on your final set, and then what you'll do is you'll just lower your weight by 50%, and then you'll just max out as many curls as you can until that burn is just unbearable. But that max pain feeling, that's what fuels bigger muscles, stronger muscles, fuels the success that I want to see in my body. And I remember when I used to be really, really, really in shape. Those are things I used to do. So, but I'm not perfect. I already said that earlier. I'm not perfect. I'm trying to, like I said at the top, like time is running by very quickly, and I had goals set that I have not yet achieved, and I'm not as close to achieving the goal as I wanted to be. So, we all have it, even me. I'm no different than any one of you. And my point is, hold grace for yourself and keep working at it. If you fall one day, just pick yourself back up and show up the next day. And I promise you, like, you are going to be in such a better place because you stuck up for yourself that way and you showed up. So good job unlocking up the accounts. I really appreciate everyone's time today. And if anyone wants to chat about any of this stuff offline, feel free to DM me. If you want to talk about it in the chat, we can always talk about this in chat, no stress. I will post this to YouTube. So for anyone listening on YouTube, I really appreciate your support there. Sub to the channel. Turn on the notifications. I'm slowly building out YouTube. Slowly building it out. Haven't figured out kind of like my identity in the whole thing, and what I want to do, how I want to do it. But I am going to start to grow that, and then see where that takes me in my trading journey. But I really, really do appreciate everyone's time, and I wish you a very blessed day. Peace out, everybody.